So thank you for being here, and thank you for being part of something which will be a long-standing tradition. As Hani mentioned, Adani Enterprise is an incubator of infrastructure assets, broadly in two areas, one being energy and utilities, the other one being transportation. So I wanted to lay the context for the media that is present as to why these two areas. So if you look at India from a global context, then in India, on average, an Indian person consumes roughly 1,300 units of power. The global average is approximately 3,000 units, and some country like China is 5,000 units, and a country like US is roughly 10,000 units. So in the energy space, there is a 5 times to 7 times to 10 times growth potential. And that is why Adani Enterprise is, as you will see when I run through the presentation, Adani Enterprise is focused on energy and utilities, and Adani has been focused on energy and utilities. The other aspect is that, I would encourage you to check this, that India has logistics costs in India's GDP equal roughly about 13% of our total GDP. And say a country like US, the logistic costs in the US GDP are roughly 7% of their GDP. So India is paying, and our consumers are paying, roughly $400 billion, putting it in context of rupees, 320 lakh crore rupees of extra costs. And that is why we want to invest in logistics. That is why you see that we've invested in ports, we are investing in airports, investing in roads, which is currently part of Adani Enterprise. So with this context, that the context you have is to why energy and why transport and logistics. The third aspect is that you will see there are areas around this core of energy and logistics. That is, a certain businesses, some businesses, be it materials, be it metals, they are heavy users of either power or logistics. So if you look at say something like cement, or then cement, the manufacturing part of cement is 20 rupees out of 100, 80 rupees is energy and logistics and distribution. If you look at metals like copper or aluminium, then roughly the metals are primarily a power business and to some extent processing business. If it is aluminium, it's primarily power business. Copper is majorly power, but it is, in science terms, exothermic reaction. So it has some heat of its own, so it doesn't require that much power. But so if you see outside of energy and logistics, we are engaged in areas that use energy and logistics in a heavy way. Outside of these three, we do very little. So less than 1% of our businesses, or if you look at overall businesses, about 3% of our businesses are in this area, about 1% of our capex goes into everything else. 99% of what we do in energy, logistics, and areas adjacent to energy and logistics, which are heavy users of energy and logistics. So this okay, this one. So if we broadly see Adani as a portfolio, the infra and utility form the core of what we do, which is today we have 5 listed companies in that portfolio which are already in public, which is Adani Green Energy, Adani Power, Adani Energy Solutions, and Adani Total Gas, and on transport side, Adani Ports. Similarly, if you see how AEL is set up, all of these companies actually came out of AEL from 2015 to 2018. And in AEL today, you have Adani New Industries, the data center business, which is in a utility portfolio, and airports and roads, which are in transport and logistics. And then you have copper, PVC in the materials and metal space. Plus emerging area in relation to digital, which is a bit more longer term investment. Now in this core investment area, if you look at the record, then APSEZ, which is Adani Ports, demerged from AEL in 2015, as did APL, as did Adani Transmission, now called Adani Energy Solutions. In 2018, Adani Green Energy and ATGL demerged from Adani Enterprises. Today, as we go forward, the basic business model remains the same, which is to have the focus on the utility space with green hydrogen. And that is now why this area of renewable power, because we have Adani Green Energy also, Adani Energy Solution also. Why focus on this? Today, India's energy chain is not indigenous. Energy is primarily imported, and therefore when you import something, it comes with geostrategic consequences, it comes with security consequences, it comes with supply chain consequences, it comes with foreign exchange consequences. So we believe that with the advent of sustainable power, sustainable energy, we have an opportunity for the first time in India to indigenize our energy chain. And that is allow our industry to compete globally with indigenous cost of energy, which today even our small companies have to effectively price their energy at the level of global markets and effectively pay an FX cost, foreign exchange cost, or US dollar cost of energy. As we indigenize the chain, the cost becomes rupee, and therefore that consequential benefit will accrue to the Indian industry. And we believe this will be a significant change that occurs in the Indian industry landscape as our energy chain become indigenized. On the airport and road network developments that we have, they are related to the logistic structures of India and the advantage that we have as we optimize the logistics chain to take away the $400 billion worth of inefficiencies in the Indian logistics market. So if I were to give you explain this in a slightly different way, today we are already paying $400 billion as consumers for this inefficiency. Let's say the cost of capital is 10%. That means we can invest $4 trillion which is 3,200 lakh crore, and the return on that capital will just come from efficiency gain. Consumer will not even realize that has been spent. Indian businesses will not realize that they have this infrastructure because the cost will not go up. And that is why our story of investment, Adani Enterprises' story of investment, is a story of wealth creation that would be unparalleled in modern history. Now some of you will wonder, 4,200 lakh crore and you are raising 800 crores. Now why this question? Why? The idea here is that if this wealth has to be created, and I've said this in many forums, this wealth and the benefit of this wealth creation must go to Indian public. This is our small start in public debt securities to allow individual shareholders, individual investors to participate in debt securities where the return on that security will exceed any fixed deposits return that they will have, and therefore is higher return on the same capital in a secured environment. An environment that will continue for the next 20 years, 25 years. One generation of investments will continue in the core of India's energy and logistics space. So it is with our banking partners, it is our starting attempt to familiarize retail investors so that they can become participant in this wealth creation. We are of the fundamental belief, and the evidence around the world shows this, that core infrastructure and energy of any country has to develop with the capital of that country. It is not appropriate to rely on global capital to build infra and energy. The benefit, our infra and energy assets must be owned in majority by the local people. The wealth effect of infrastructure and energy must remain in majority with Indian public. And so right across the capital chain, we will introduce products, we will continue to enhance these products so that the Indian public can participate in a meaningful way. So that's the reason behind starting the way we've started. Some of you would have known this, so I don't want to belabor on this slide too much, but it has been a multi-decade story of success of building businesses that are today well known within the national landscape. Needless to say, they've also created significant amount of wealth, significantly above what the Indian stock market indexes have earned over that period. So today the portfolio of Adani Enterprise is consistent with this theme of energy and infra plus adjacent assets. From a business point of view, we'll go through the utility businesses first. So Adani New Industry, which is the green hydrogen ecosystem, it is modular in nature. So what it means is that why it is modular, it is that we want to build the core energy extraction system. So in the green hydrogen ecosystem, the main cost element is at what cost do you extract the energy and how you extract the energy. And to extract the energy, you need modules and wind turbines and electrolyzer at certain price. And our first step was to ensure that the module cost, the wind turbine cost, and the electrolyzer cost are known, predictable, and clear. To do that, we have to create this whole ecosystem from ground up, which we have now created. This is hugely profitable ecosystem by itself. It's in the numbers I can answer in Q&A, but that's across 3 chains, which is final product of module, which all starts all the way from foundry, which we will do over the next 3 years, but ingot wafers, then modules, and ancillary infrastructure as well, which is now up and running at Mundra. Wind turbines are important. A lot of people make wind turbines, but the key in wind turbine is that you need the type of wind turbine that is suitable for the specific market. Today, the wind turbines are made primarily by Gamesa, Siemens, etc. They make wind turbines primarily suited to European and US market, and therefore we needed specific type of wind turbine. For example, the 5.2 megawatt onshore wind turbine, which nobody made in the world. So we had to develop that because that is required under the wind pattern of India onshore to extract the wind energy in the most efficient way. Similarly, on data center and water is small at the moment, but it will become large as we go along over the next 10 to 15 years. But on the data center element, a lot of you, I'm sure, one way or another today use UPI. Yeah? Okay. Maybe I'll start with a question to the media. What is UPI? So, non-technical term. So, India has built a public infrastructure, digital public infrastructure, which is unparalleled and is one of the singular achievements of this government in the last 10 years. The digital public infrastructure is that you have identification layer, which is Aadhaar. Underneath the identification layer, there is a transaction, which is where the UPI transactions happen. Underneath the transaction is applications layer, which is a Paytm, all these applications. All the fintech is the application layer. So this is the digital stack. Now, some of you could have used, if you've come through our airports and you are registered. Honey, are you registered for Digi Yatra? So Honey used Digi Yatra. That is called the utility. Because we have the identification layer of Aadhaar, transaction layer, and apps layer, you can set up all these utilities. Now, when you do this, something is processing this data. And this is domestic indigenous data. So it will sit on data centers and servers in the country. That's where our data center business fits in. Because as this grows, okay, today when you do a normal search, and let's say you spend 1 unit of energy, when you do an AI-enabled search, you spend 9 times that energy. So that energy is consumed by these data centers because of the processing of the data. So when you do Digi Yatra, you show up, it checks against Aadhaar. It can automatically also verify how you've done your banking, etc. It can clear the security. Yeah. All of that processing power requires analytics and data. And so therefore, this is just a start. Data centers will be one of the core users of energy going forward. And India's energy requirement will be higher than what it would normally had been if you were just following the trajectory of energy, because data center is nothing but like an aluminium plant. It's energy only. So something like UPI and the domestic digital stack is propelling the data center business, and therefore we believe that is a business of the future to support the continuing development of the public digital infrastructure in India. And this will be a key enabler. Airports and roads, as I mentioned, is largely plugging in the gap of the logistics inefficiency. And therefore, these investments and these growths in these businesses will continue for a few decades to come. So they are like the sunrise industry. Because the sheer volume of investments required in this, because the entire return on investments in logistics will simply come from efficiency to the economy. That is, we find ourselves in a position and that is largely driven by the policy architecture followed by the government for the last 10 years. A material change in the structure of Indian economy in the last 10 years that's been engineered by this government, and that has put us in a position where these efficiency gains will accrue. And in one place, this efficiency gain has already accrued. If you follow India's current account deficit, you will notice something changed materially in the last 10 years. The manufacturing deficit has disappeared. Atmanirbhar Bharat has been a great success of this government. And therefore, when you build the manufacturing ecosystem, which we did in our green hydrogen, impact of all of those little things in manufacturing has meant that for the first time in 75 years, we find ourselves in a position as a country where our current account deficit in relation to manufacturing is practically zero. So if we, which with AEL does, which aligns closely with the domestic needs, it allows the development of businesses that are consistent with the need of the country and they get their return from the efficiency and the growth required by local population. Metals and materials simply serve these industries, and so therefore we have investments in this area that is largely to support, develop, enhance, de-risk the core energy and logistics space. Operational function, AEL acts as an incubator, but we are here for public issues, so I just want to run through very quickly. Although we don't internally track P&Ls, because our main focus remains on development of new businesses. But nevertheless, on consolidated basis, P&L is reflective of the nature of the underlying businesses. It has been consistently upward trend. Today, our EBITDA, just as a aside, AEL's EBITDA itself is broadly similar to or greater than the entire Adani Group's EBITDA of around 2014-15, Saurabh? Yeah, 2014-15. So there's a lot of progress. All of this is cash flow that is backed by rock solid embedded businesses in the local economy. Green hydrogen manufacturing ecosystem, airports, roads, etc. Growth's been very high, significant double digits, well over 20%. You will see some fluctuation in our revenue line that happens. That largely happens because Adani Enterprise has a trading business called Integrated Resource Management, and there the top line moves with the pricing. So the correct way to look at all of this is what's happening to the underlying margins, and underlying margins keep improving, so our EBITDAs continue to rise. That is the efficiency dividend that is coming through. There will remain fluctuation in the income line as long as the IRM business is there, because that's just the dollar value of the commodity that is trading. Within the incubating businesses, as you can see, broadly some growth is, you can't even quote it in percentages because it's multiples, but broadly significant double-digit growth across the board. Even in the established businesses, the overall efficiency dividend means that the growth in the EBITDA continues to be on an upward trend as technology interfaces increase in the businesses. Since this is a debt issue, on a console level, depending on where we are in the capex cycle, the numbers go up and down. But broadly speaking, we remain well within the range of credit quality and ratings. And we expect the ratings to be on continuing improving trend. It will become evidenced over the next 6 months, in fact, and largely driven by the fact that we are well within the range at which the credit rating agencies expect us to be. So we are the lower end of the range that they expect in terms of net debt to EBITDA, or in the higher end of the range in terms of how much cash we have in relation to our debt and how much cash we produce in relation to our debt. Standalone basis, obviously, we are under 1 times net debt to EBITDA. That means we got significant balance sheet capacity to grow even faster if we want to. But there our constraint is development of new vendors who can support construction. So currently we have a vendor ecosystem of about 40,000 vendors in the country. We need to build that to roughly about 85,000 vendors. So we have to help create about 45,000 more small businesses who can support us in our capital investment program, which we will do over the next 5 years. Sometimes, the questions comes in relation to environmental, social, and governance. Needless to say, it remains a central feature of what we do. Actually, not just AEL, all of our companies, be it ports, be it green, Adani Power, we rate at the top end of the rating agencies that rate us. We rate at the top end of the global averages. And from an overall perspective, we run one of the highest rated ESG portfolios in the country. But it's rooted in actually management system that support this. So
फूड प्राइसेस ज्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविजन, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
This week on India Ascents.
Pole-bound Sri Lanka and volatile Bangladesh witnessing India versus China power play. Will the trouble in Balochistan topple the cozy China-Pakistan relationship? Is the pro-China Moizu government in Maldives in trouble? The French flip-flop over the next Prime Minister continues.
All this and more only on India Ascents with me, Gauri Dwivedi, at these timings on the NDTV network.
I wanted to work less and make more money. I didn't even have money to afford an water purifier. I tried everything, right? I was scrambling, I was cold calling. I didn't get it right in my first business. Second business probably meant I did not have the right to be an entrepreneur. All said and done, the most important step was always showing up at the start line.
passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that
All right, very interesting news that we are covering on how many billionaires are being created in India. So we're looking at the Hurun India rich list, and for the first time we have more than 1,500 entrants on the list from India. So look at it in this perspective. That's an increase of 150% from 7 years ago. In fact, India's billionaire count crosses the triple century mark. There are 334 USD billionaires, 6 times since the list debuted 13 years ago. Now, more details on the list, and what's really interesting is also about how you are creating a billionaire in India once every 5 days in the last year. To speak more on the list, I'm joined now by Anas Rahman Junaid, Managing Director and Chief Researcher at Hurun India. Mr. Junaid, thank you so much for speaking with us here on NDTV. Let's start with what are the key highlights of the list this year?
Thank you. Thanks for the opportunity. I think you covered some of the key highlights. In the context of Olympics, I would say that India has struck gold in terms of wealth creation. So, and that's particularly important because we do a comparison between the other global list of Hurun. For example, when we look at the China, the number of billionaires in China, that's come down by 25% in the last year. But in India, there is an increase in the number of billionaires by almost 25%. And that's quite exciting from a wealth creation standpoint. So Hurun Rich List is all about creating celebrating the story of transparent wealth creators in the country. And from that context, the fact that there are more and more wealth creators are emerging from India is quite exciting. One interesting point that I wanted to highlight is when we put out the list about 12 years back, manufacturing was not the top 3. I think software and services was one of the top 3 wealth creating sectors in the country. Fast forward now, the top 3 by far are from the manufacturing sector. We also did a analysis of the wealth creation amongst the top 20 industries over the last 5 years. And we again noticed that out of the 20, at least 15, 16 are from the manufacturing sector, who's added more wealth from a CAGR perspective compared to services industry. So that shift is very evident, and people speak about India wanting to become manufacturing, government thrusting on that point, but all that is being in fact seen in the rich list. And if anything to go by, this is a good indication of how the companies are doing in India, how the value is being created in India. So that's quite exciting for my standpoint.
Absolutely, and you see it in the components of the top 10 list. In terms of the top 10, Mr. Junaid, what are the key observations that you've made this year and the big changes?
I think one big change is Mr. Gautam Adani is back number 1 after what happened a couple of years back in terms of Hindenburg allegations and so on. I think I've written my press release also, he's risen back like a phoenix. By almost all of his company has companies have done very well, and he's taken the number one spot, and that's quite exciting in terms of how Indian entrepreneurs are more and more self-made entrepreneurs are creating super valuable enterprises from a top 10 standpoint. And you also see you also see the number two is Mr. Mukesh Ambani, and number three is Shiv Nadar of HCL, who has also had a great year when you compare to his peers, and maybe in the software sector. But then the top 10 is interesting, but I think what is more exciting for me is when you go deeper into the list, the overall statistics from a list perspective that is the most exciting part. Even if you look at top 10, to enter top 10, if it was 10 years back, to enter top 10, you had to have a wealth of about 44,000 crores. Now, fast forward 10 years later, it is about 1,60,000 crores. So that number has gone up by 4 times. So 5 years back, it was 72,000 crores. So from a top 10 standpoint, it is getting even more difficult to enter the top 10 wealth creators in the country.
Yeah, that's definitely one interesting aspect that you've talked about. And the other one, Mr. Junaid, is of course the presence of Bollywood names. King Khan, Shah Rukh Khan has made it to the list for the first time.
Correct. Yeah, I think India is it's a very evident fact that Indians are very glued on to Bollywood and cricket. I think Mr. Shah Rukh Khan has entered the list based on his holdings in the sports teams and his entertainment company. So that's quite exciting, and you would see a lot more of wealth creation happening from an entertainment lifestyle. More than Mr. Shah Rukh Khan entering the list, I think what is more exciting is that IPL is becoming super valuable. A lot more sports owners coming in. Sports as an industry is gaining traction. So all this is a good indication that look, there is not just traditional businesses and stock market that you can make wealth from. There is also other avenues like investing in an amazing sports team and growing it and so on to create wealth from. So that is what we are trying to say through Mr. Shah Rukh Khan's entry.
It's not just that, and you're right, India might be Bollywood obsessed, but we're also seeing the trend of people in the film industry becoming very astute business persons, and that's
Correct.
visible in your list, right? Juhi Chawla and family
Correct.
are there, Hrithik Roshan is there,
Correct.
Karan
Correct.
Johar is there, Mr. Bachchan
Correct.
is there. So is that
Correct.
relatively a newer trend that you've been seeing over the last few years?
I think it's more of a formalization of how the value is being created compared to what it was 10, 15 years back. You having a proper structure in place in terms of how do you capture value in new businesses. You having a structure in place in terms of how your entertainment business is managed. You having more aware and understanding the influence that one might have in terms of creating more brands that could reach to consumers. So that is thanks to all the social media and awareness and Instagram and all that stuff. So that's really played a huge role in some of these companies being created. And I wouldn't be surprised in next 2 to 3 years time, you'll see a lot more entrants from actors turned entrepreneurs or investors getting into the list.
Okay, let's talk about the participation of women in the list. And, you know, you have a separate sort of heading for women entrepreneurs, or actually women who've made it to the list. What are, the key trends that you've observed there?
I think self-made entrepreneurship from an Indian women context, I think we are definitely growing. When we started the Hurun India Rich List in 2012, the number of self-made women entrepreneurs in the list was about 10 or 12. Yeah. Now it's almost gone up to 50 plus. So that number is definitely increasing. So that's one trend. And one important trend that I would want to highlight in terms of more and more women participating or being part of the top wealth creation or driving the narrative of wealth creation as one statistics, which is basically almost 65% of the Hurun India Rich List are age 60 and above. And that number, if you add the total wealth of all those individuals, that comes to about 1.5 trillion USD, which is almost half of India's GDP. And and this wealth is going to witness an intergenerational wealth transfer over the next 10, 15 years. So you would see a lot more next generation entrepreneurs from the families, women especially, would also take a front seat in driving the respective companies. So from a women wealth creation standpoint, of course, there'll be a lot of first generation entrepreneurs. There'll also be a lot of next generation wealth creators from the respective families who would enter the list in future.
Some of the names that I'm seeing on the top 10 self-made women in 2024, Radha Vembu, Falguni Nair and family, Jayashree Ullal of Arista Networks, Kiran Mazumdar Shaw, Neha Narkhede and family, Juhi Chawla, Indra Nui, Devita Saraf, Kavita Subramaniam. So, you know, a lot of interesting trends coming in there as well. Even on the youngest list, and I found this key to see, look at the age group of those who are making it to your 2024 India Rich List in the youngest category. I mean, you have Zepto, the Zepto duo, of course, Aditya and Kevalya. But you have Rohan Gupta and family, you have Ritesh Agarwal. And that's, I think, a very interesting story as well.
Yeah, it's so also that this really shows the energy of new age wealth creation in the country. So in when we launched the 2012 Rich List, the youngest in the list was 37 years old. Right now, the youngest is 21. And if you look at the number of wealth creators who were born after the 90s, that number is around 10 to 15. So that clearly shows age is no bar in terms of when it comes to creating amazing companies and ventures in India because of the ecosystem, internet penetration, access to capital, and so on. So it's exciting. I think age is definitely. I think we've kind of traveled back in time when it comes. I mean, we've saved a lot of age advantage because of all these technology and other advancements that we have in the country right now. So, of course, the youngest now is possibly 16 years younger than what it was 10 years back.
You know, just overall, the view, Mr. Junaid, on what this is telling us about wealth creation in India. And of course, your biggest names are still from very well-known families and families who've been in business for generations, but you're seeing so many new entrants also break through. Would that be a very key trend that you're noticing?
Absolutely, very much. I think let me tell you the demographics of the new entrants. That's very important as well. Of course, India has been home to some of the most successful family businesses in the world. We also have a lot of amazing first generation entrepreneurs who started mainly from tech. Also there in India. But if you look at the next sort of wave of wealth creation, I really think is, of course, going to come from the next gen set of entrepreneurs. Secondly, professionals are going to play a huge role when this intergenerational wealth transfer happens, when more and more families professionalize running their businesses. You would see a lot more next gen entrepreneurs taking the front seat. Professionals taking the front seat. Then one interesting category is the capital providers, right? I think you have last year, Manish Kejriwal entered the list for the first time. He was more from the PE side. But this year, you have an angel investor debuting this. Anand Chandrasekharan entered the list for the first time. And his wealth has primarily come from investing in startups over the years. So new entrants are going to come from professionals, next gen, new age startup entrepreneurs, investors, and so that you'd see India firing from all cylinders in times to come.
Absolutely. Thank you so much, Mr. Junaid, for speaking with us, the Managing Director and Chief Researcher at Hurun India, talking about some of the highlights of the list. We'll just recap for you the top 10 list this year and a lot of key changes over there, especially in the number 1 and the number 2 spot is, of course, the big takeaway. But even beyond that, the kind of trends that you're seeing in entrance of Bollywood, Shah Rukh Khan comes in for the first time, self-made women entrepreneurs, youngsters making it to the list, those from capital markets going up the ladder is all very, very interesting trends that we are seeing this time round. All right, before we get to more on the show, let's take a quick look at what's happening in markets as well. At this point, a little bit of pressure coming in. Markets definitely off the day's highs as we speak, managing to stay above the 25,000 mark, but not quite with that kind of speed. I think IT stocks are still the story of the day, and the Nifty IT doing fairly decently in comparison. Fin services are also doing fine, but you're not seeing that participation coming in from the bank Nifty in any great fashion. Let's pull up the Nifty components. And the Nifty contributors, Bajaj Fin fine, ITC, you're seeing a lot of I would say defensive plays over there. Not too much action on an RIL also ahead of the AGM, so that's one to mark out. Metals definitely seeing pressure, and pull up the metal index and you'll see that quite clearly. Hindalco there leading some of the losses coming through. In terms of the top gainers and losers on the Nifty 500, a lot of stock specific and news focused kind of action that you would see on the Nifty 500 as well. And KC International, one of them, of course, TV18 and Network 18 up ahead of that AGM. Sonata soft because of order wins, and that's really the kind of news that you're seeing more than anything else. But Agam also joining in now for more on the markets.
Yeah, absolutely. Well, we started seeing a little bit of an up move here, on the Bank Nifty, and that has actually led to the Nifty also edging up higher, back towards the mark of 25,100. That's where we have a little bit of resistance, but perhaps today will be the day where we keep the 25,200 mark in mind, and several other factors, of course, that will be in play. But that said, let's talk about a handful of counters that we will be addressing for now. And there's plenty which is happening in the markets, and a lot that has been spoken about as well. So perhaps we can start by taking a look at Paytm at the moment. So there are two developments when it comes to Paytm this morning. One is that the finance ministry has given the company the nod for the downstream investment into Paytm payment services, and that Paytm has suggested that that they will continue to serve the clients who are already, the merchants who are already with them, and they will have to resubmit an application for onboarding newer merchants here on, but they have an RBI not to do so. So we've seen a little bit of an improvement in sentiment for Paytm. Notwithstanding that, we also have a broken note in Ventura Securities this morning, where they are actually expecting Paytm to double from here, and that's the minimum. Some interesting, updates when it comes to Paytm. So let's get in an expert opinion here. We have Sameer Dalal of Natwarlal and Sons Stocks Brokers joining us on the show. Sameer, good afternoon. Thanks for joining in. What is your own stance on Paytm at the moment? How are you assessing trade, perhaps the long term in mind here?
So for a long term, I think it's an interesting investment to make, because the downside to some extent, I will say, is capped, because you've seen the worst for it. You've seen it go through two big regulatory hurdles, were first from RBI and then from SEBI. They've taken the corrective steps that needed to be taken, or they're taking them as we speak. All the legacy issues hopefully will be behind them. Now, they've also divested their ticketing business to Zomato recently, which will allow some money to come into the company, which will definitely bode well. So what we believe is the business, which is of the fund transfer and of the buy now, sell later, and all of the merchant businesses, once they start seeing a growth again, we believe they could start turning EBITDA neutral. And also, if you look at the EBITDA, there is a big chunk that comes from ESOP. So if we eliminate that part of that, I mean, it's not as bad as the numbers look when you put them up, on the screen of what is actually reported. So if you dig down a little deeper, it's not so bad. So we believe there is an opportunity to probably make some money in Paytm, but I think it's going to still be a long way ahead. So if you ask me for a long-term view, yes, positive. If you ask me for the next 6 months, I think it's still going to dilly-dally in these ranges between 500 and 600.
Let's move on and talk about the next one. And the next one on our radar is PB Fintech. Now, earlier this morning, we had the update that Tencent will look to shelve its stake in this particular company? Well, Tencent, of course, before this had a 4% stake, and after the big block that has come through, we're looking at that 2.1% decline, rather the 2.1% will come off as far as the stake is concerned. And because of that, we're looking at a little bit of pressure on PB Fintech, but not that much. But Sameer, come in on the long-term prospects of this insurance aggregator. While the insurance companies continue to struggle when it comes to returns, giving returns in the market, PB Fintech has been going from strength to strength. How are you assessing this one?
Absolutely. So, there's a difference between PB Fintech and the actual insurance product manufacturers, right? So the insurance product manufacturers have a lot of risk that they take on their books. And if you have to, first of all, differentiate between the life insurance and the general insurance. So in the life insurance space, there's a lot of regulatory hurdles coming in the fact that we might see some cut in the kind of surrender charges that are there right now, which will affect the profitability for some of these companies. But we still believe that the life insurance companies can grow. So we are quite positive there, but there could be when it comes to general insurance, we know that there's a long way to go for them to, get some, what can I say, where we can have 50 to 60% of India, which is insured. So I think the growth opportunities for both of them are very strong. Now, given that fact, PB Fintech comes into the space because they are one of the largest distributors in the country, and they have an online platform which allows them to reach a much larger audience themselves rather than through a distribution network. And of course, they have tie-ups with distributors in place, which allows them to work through the PB Fintech where they share some amount of commission. So they have good growth opportunities. The problem is I don't believe the profitability for PB Fintech is going to be able to increase significantly in the near term, and valuations have run up. So although I believe the growth opportunity for PB Fintech is very strong because of the growth opportunity for the insurance companies, I'm not comfortable with the valuation side. There is operating leverage, I don't deny it, but like I said, they also have this distribution tab where they have to share a big chunk of the revenue that is generated from the insurance selling product to these distributors themselves, and they keep a small margin. So I'm not saying the operating leverage can't play out, but I think it's going to be a while before it scales up and makes any significant dent to the earning multiple. So for the time being, I would avoid PB Fintech. That's my personal view.
Okay, so that's the view on PB Fintech. Let's move on and talk about Interglobe Aviation. This one has also seen a big trade come through, and this is from founder Rakesh Gangwal. But for more updates here, we have Mahima, who's now joining us on more. Mahima, good afternoon.
Good afternoon, Agam. So, Indigo did see a 5.8% block of its total equity as a block trade today, and roughly 22.5 million shares were exchanged. And the share of Gangwal family, like you rightly mentioned, has dropped from the 19.4% mark to the 13.5% mark. And now, just to give a brief perspective as to what the holdings were before, Rakesh Gangwal held around 5.8%, and the Chinkarpur Family Trust, which is held by both Rakesh Gangwal and his wife Sobha Gangwal, held around 13.5%. Now, since Feb 2022, since Rakesh Gangwal had stepped down from the board, he has been reducing his stake. As of December 22, his family held roughly 34% stake, and as of December 22, Rakesh Gangwal had 13% stake. As of December 22, Sobha Gangwal had 7% stake, which was completely sold off by September 23. So this has been the timeline in terms of how the promoters, that is Rakesh Gangwal and Sobha Gangwal, have been selling their stake in Interglobe Aviation.
Hey, Mahima, thank you for joining us and getting us that update. Sameer, while we have known that the founder has been reducing stake, Interglobe Aviation seems to have found a firmer footing in general in terms of its share price, and perhaps on the back of improvement in prospects going forward. How are you assessing this stock, keeping investments in mind?
So in general, I'm not a very big fan of the aviation industry, but I must say Interglobe has probably beaten all expectations, and they continue to do well. And where I think Interglobe stands out is when all the other airline companies are not being as profitable, Interglobe has been very, very profitable. So they're obviously doing something right. Now they are also going to be focusing on more international routes, getting in business class, getting a loyalty program started. These things are going to be positive because a loyalty program means more and more people will be interested in flying and Interglobe more often rather than, because people who fly often then usually move to Vistara or Air India, where you have these loyalty programs. So they'll be able to get some more. Now, they already are the largest player in the market. They have a lot of plane additions over the next couple of years. So the number of routes will keep increasing. So and if you look at it, valuations is trading at about 24 times earnings. We believe there's a long run for India where travel and tourism is going to mature. It's still, I think, at a very early stage. There's huge opportunity for growth from the domestic market and international market. So we continue to believe they will do well. But in general, in principle, we don't invest in the aviation sector. But someone who likes to invest in the aviation sector, Indigo is the play. Valuations are not expensive. One can take a call. But like I said, we don't invest in it.
Okay, fair enough. But from there on, we move on to KC International. Now, KC International has come up with an update and in terms of its order flow, and they have suggested that they have won orders worth about 1,171 crores from the Middle East. This is a bunch of orders, and these orders are coming from Saudi Arabia and the UAE, and this is for transmission and distribution essentially. We've also spoken to the management in the past as well as over the orders, and they're of the opinion that largely things are falling in line. They're expecting about 15% growth when it comes to the top line going in. Their execution is well on track at the moment with the kind of order book that they currently have. And the railway bit, the railway segment specifically, in this case has seen a little bit of slackness, but that is also something that will come eventually into play. Let's not forget that yesterday we also had some updates from the cabinet when there was a lot of focus in developing the railway corridor. We haven't exactly seen a lot of companies will react to it, but KC International certainly is advancing at the moment, at least on the back of sentiment. Samir, your view on KC International, what's the way forward here?
So sadly, we don't have coverage on it, so I can't comment on it. But I can tell you that the industries that they cater to, which is the power transmission, the railway industry, they also do some amount of work in the oil and gas space. I mean, we do know what the company does, but we don't have active coverage. But what I can say is, look, we expect order flow to remain strong, given that execution will definitely take an uptick. But I think what I last remember seeing is the valuations were expensive. But like I said, I don't have coverage on it. But what I can say is the orders and business will continue to grow. You just got to look at where the valuations stand at this point.
All right. Okay. Well, Samir, we'll leave it at that. Thank you so much for joining us and taking us through your opinions on the various stocks that we wanted to address on the show. Of course, it's turning out to be yet another quiet afternoon when it comes to our own markets right now. Not much to speak for, but there is a little bit more weakness when it comes to the broader markets. So the mid-cap index is down around 0.8%, and the small-cap index is also down by nearly just as much. There's a little bit of an underperformance coming in from the broader markets, as we speak. But with that, we are out of time on this edition of Hot Money. Lots more lined up on the other side. Keep watching NDTV Profit.
फूड प्राइसेस ज्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे तो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है, आज भी वो physical है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया। हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
on India Ascends.
Pole-bound Sri Lanka and volatile Bangladesh witnessing India versus China power play. Will the trouble in Balochistan topple the cozy China-Pakistan relationship? Is the pro-China Moizu government in Maldives in trouble? The French flip-flop over the next Prime Minister continues.
All this and more only on India Ascends with me, Gauri Dwivedi, at these timings on the NDTV network.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning. I would say Bangalore is a great place to go out and sort of buy. If you're an investor, people who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
Welcome, you're watching Market IQ. I'm Mahima Vajrajani and with me is Anushi Vakharia. Before we move on with the show, let's take a quick look at what the markets are doing. Let's quickly pull up what the benchmarks are doing and let's see what Nifty 50 is doing at the moment. The Nifty 50 is up around 0.3%, 0.4%, and let's also see what Sensex is doing in terms of benchmark indices. The Sensex is also trading within the same range, up around 0.4%. Let's also quickly see what the broader markets are doing. The broader markets are a tad bit under pressure today as compared to the benchmarks. There you go, the mid cap 150 is down around 0.7% and small cap 250 is also down around 0.6%. Let's also quickly see the Nifty contributors. What are the counters that are weighing down on the Nifty and weighing up the Nifty? There are counters like ITC, ICICI Bank, Bajaj Finance, RIL are the few counters that are weighing up the Nifty, whereas there are counters like M&M, Grasim, Hindalco, Power Grid that are weighing down on the Nifty. Let's also quickly pull up the breadth of the market. The breadth of the market has been a little volatile today in terms of the advance and declines. In terms of current situation, the advances are roughly 600 versus declines of 1400. So the ratio is a slight bit, a bit higher than the 2:1 mark, where the market is skewed towards the sellers. Let's also quickly pull up the sectors and see what sectors are in green and red. There you go. There's Nifty FMCG, which is doing well today, up around 0.9%. Nifty IT is up around 0.6%. Nifty Finance is up around 0.6%. But something that's under pressure is Nifty Metals, down around 0.6%, Nifty Auto down around 0.5%, and Nifty PSC down around 0.4%. Let's quickly pull up the counters that are buzzing in the Nifty FMCG as well as Nifty Metal. Let's see what are the counters that are contributing towards this upward in Nifty FMCG. There are counters like Britannia, which is up 2%, ITC up around 1.7%, HUL up around 1.4%. Nestle also up around 1%. But there is stocks like PNG, which is under pressure post its results yesterday. Let's also and as we speak, markets are recording at all-time high. The Sensex is at 82,000 mark, and let's also see Nifty. Nifty has crossed that mark and it's at 25,159, and it's at its record high. But let's shift focus to Indigo, and let's pull up the stock and see what Indigo is doing in trade right now. It's down around 1.7%. Indigo, there has been a stake sale in Indigo by the promoters today. There has been a block deal, and around 5.8% of equity has exchanged hands. Now, in terms of shares, around 22.5 million shares did change hands in the block trade. The shares of Gangwal family has fallen from that 19% mark to 13.5% mark. Just to give a reference to the viewers, Rakesh Gangwal held around 5.9%, and Chinkarpur Family Trust, which is also a trust managed by Rakesh Gangwal and Sobha Gangwal, held around 13.5%. Now, Rakesh Gangwal stepped down from the board in Feb 22. Since then, he's been selling stake in Interglobe Aviation, and as of December 22, the entire Gangwal family held 34%, and Rakesh Gangwal held 13.24%, and Sobha Gangwal held 7%, and Sobha Gangwal exited completely in September 23. Now, overall, if we see the structure of how the promoters have been exiting from Interglobe. As of September 21, their stake was roughly 75%, and now it's gone down to 55%. And FIIs and DIIs have been increasing their stake. As of September 21, it was roughly 18%, and now FIIs are holding roughly 24%. And for DIIs, the stake as of September 21 was 4%, which is now gone up to 15%. So it's interesting to know that promoters are exiting when actually Interglobe Aviation, a lot of brokerages in fact have been positive on Interglobe Aviation, and now that they've entered into the business class segment, and now that they've entered into they've entered more international flights, and now the growth is taking place, the promoters are exiting. But let's shift focus to Paytm now. It's one stock that is just extremely volatile. One good news and it hits an upper circuit, and one bad news it goes down. But recently Paytm has received a nod for its downstream investment in Payments Bank, and Harsh joins us with more details. Harsh.
Right, Paytm in focus largely on the back of the fact that they've got approval for downstream investment in their subsidiary. What this essentially will mean is that the payment aggregator license, which was taken away from Paytm, will likely Paytm will reapply or will be allowed to reapply for this license, and which is a key positive, because what will thereafter happen is that they will be able to basically get in or bring in new customers. But let's go back to markets, because we're continuously hitting record highs. 25,170 is where we are at currently. If we can pull up the Nifty, and we're seeing a bit of a spike there, and largely led by banks. Let's pull up the contributors. And in terms of where we are in terms of our contributors, there you go. ITC, of course, FMCG doing well in trade today, top sectoral gainer in trade. You're seeing ICICI Bank, Reliance lead the charge along with Bajaj Finance. So the financials are what's taking, doing all the heavy lifting in trade today. Let's pull up the sectors as well. And there you go. Those are sectors. You're seeing FMCG doing well. Fin Nifty also doing fairly well, IT chipping in as well. So, and the Bank Nifty up around 0.4 odd %. And from the lows, if we can pull up the Bank Nifty, that's really carried the Nifty higher. You're seeing record highs on the Sensex as well now. So both benchmarks continuing to do well. Second consecutive day of record highs on the Nifty. But let's quickly bring on board Dilip Bhatt, who's the founder at Pedigree Advisory. Dilip, we've seen a fair bit of rotation, and that's probably what's playing out in trade today as well. Today's record high also largely due to rotation. We've seen a good participation from banks coming through suddenly, and that's why we've seen these record highs. You believe there's still scope for further upside from here, and what will be the sectors in focus for that?
Sure. I think, as what you very rightly said, the sector rotation has been happening very regularly, and that's the very conspicuous part about the indices that we have seen. And I think the same thing will continue, because without any doubt, in the long run, we all know that indices are headed strongly upwards. Maybe on an annualized basis, indices will move up by around 12 to 14%. But they never move in a very linear way, as what we all know. But certainly at the current levels, it is something that one has to tread very carefully. And I know that all of us have been telling about treading carefully, and despite that, the indices have been going up, because a good amount of money supply that is coming in. So what I would say is that one should not be in a hurry very much to commit in the market. I think markets will certainly give an opportunity, if not in terms of correction of indices, But this time-wise correction possibly it may undergo, and that possibly will give us some opportunity to have a very objective view.
You know, we've seen this bit of divergence both yesterday and today, Dilip, with regard to the broader markets versus the benchmarks. So, yesterday we clocked a high of 25,129, if I'm not wrong. Today we've breached that, we've gone to 25,170, and we've come off that. But the mid space, which is the broader markets, not doing as well. You believe that that trend is likely to continue for longer? So do you believe a large cap outperformance is warranted?
Well, I think the mid caps have had an unbelievable dream run that we have seen, and the kind of valuations that we are seeing, ignoring the cash flows, ignoring the kind of capital that they will require, and ignoring some of the basic fundamentals, I think I must say that the mid caps have really surprised everyone on the positive side. And now with some kind of this technical part which is playing its part, I believe that the removal of margins on some of the mid caps will also have its impact. So I would say that yes, mid cap needs to take a very serious pause. And I think one needs to dive much more deeper than what we have done over there. And it's time for the big caps really to outperform. Particularly, I would say that the FMCG sector looks very ripe for performing over next 2 to 3 quarters. To some extent, I think banks, people have been very, very tentative and apprehensive because of the NIMS pressure and the lack of deposits being available to the banks or funding their credit growth. So I would say that...
Dilip, I'm sorry I'm interrupting. Within FMCG, could you give us a broader perspective? What do you like before I come to banks? What do you like? Do you like staples? Do you like durables? Do you like the core FMCG products? How should one look at it? What do you like most?
FMCG space, I would go for the staples, basically. I think the likes of Levers, the likes of Nestle, the likes of Marico. I think somewhere these 2-3 factors will catch up in this. The subduing of the inflation, the pickup in the rural demand that we are seeing, and a good monsoon that has really happened is underway. So I think all this would lead to somewhere, I think in the next 2 to 3 quarters, getting reflected in the volume numbers of some of these companies. So that's how I would play the FMCG.
And financials, I'll allow you to complete that point.
Well, I think the financials also, the way they have underperformed of late, largely on the fears of compression of the NIMs and possibly some fear of gross NPAs rising is what is expected. But I think the financials will continue to surprise in terms of the resilience that they have built in. So I would say that financials also look pretty good, and I would say some names like of course, ICICI Bank is leading the pack, but HDFC Bank, of course, has been a gross underperformer. That also looks pretty good. I would say something like in the PSU space, I would say an SBI or PNB would look pretty good and interesting. Or maybe in the NBFC side, I would say something like Manappuram Finance also would look good.
And do you believe that a rate cycle reversal, who do you think will benefit most? You spoke about an HDFC, but that one's not moving at all.
So, in terms of the rate cycle, I'm not too sure whether the rate cycle will get reflected in easing of the NIMs, because the deposits have been very challenging. Deposit growth have been very challenging. So I think even if the rate cycle starts, the RBI starts cutting down on the rates, I'm not too sure whether the banks will be in a position to do the same, because they would continue to compete very intensely for getting the deposits to fund their credit growth. So I'm not too sure from that aspect how this is going to play out, though I'm a bit more apprehensive on that front.
All right. Thank you so much, Dilip, for breaking this down for us, for joining us at short notice. Of course, Nifty continuing to flirt with record highs. We are very close to 25,170 still, and 82,200 on the Sensex. But let me welcome on board Gautam Shah, founder, chief strategist at Goldilocks Premium Research. Gautam, we've seen now back-to-back days of record highs. Further scope, do you believe, for further upside from here? And what will really drive markets higher now?
Hi, good afternoon. I think new highs has really been a norm for many weeks now. And I think markets have really climbed a wall of worry given the local developments around the budget and the elections and the global development that you saw early this month. And I think despite all of that, to have the Nifty at levels of 25,000 and beyond, I think it's quite commendable, and you have to give it to domestic liquidity. The point that we keep highlighting all the time. And I think the way global markets have also rebounded in the last couple of weeks, I think this tells you that globally, this trend continues to be quite strong. Indian markets remain in a good space. I know there are talks around valuation, but I don't think we are still over the top. And I think what happens in the US in the next 1.5 months on the elections and the rate cuts is something that Indian markets will be watching closely. And if we do have our own interest rate cycle reversal, which I think is coming, I think that's going to lead to new beneficiaries and new sectors doing well. But as things stand, we remain positive. I think there is more upside. There is no point trying to call a top or trying to find whether the market is overbought or not. I think the momentum is great. The next probably stop on the upside is about 25,500, and we head higher. And we are betting big on banks and NBFCs making a strong comeback. We are betting on metals making a strong comeback, chemicals making a strong comeback. So we are actually focusing on newer sectors as we head into the next few months.
Very, very interesting. Let me come to metals right off the bat. Levers for absolutely any push in metals. What would you look out for?
See, I think a lot of sectors just go through their routine consolidations from time to time. And in the last 2.5 months, the metals index has been absolutely range bound. We've seen a good rebound in the last 10 days. We are back at the upper end of the range, which is around 9,600 on the NSE metals index. On the ground, the news flow hasn't been the best, when we speak to people, and that's probably the reason the metals index has taken a bit of a breather. But I do believe that a breakout past 9,600 is coming in the next 7 to 10 days. And on that confirmation, you could see the metals index appreciate by another 10 to 15%. So chartically, I think everything is in place. And also from a valuations perspective and from a risk reward perspective, I think metals is better off than many other pockets in the market which are extremely overvalued. So I think I'm very, very comfortable with a JSW Steel or a JSPL, Hindalco, Vedanta, SAIL, Nalco. And I think this entire set of stocks should do quite well over the medium term.
Got it. And do you think pricing led, will it also be volume push? What's your sense on some of those metrics?
Well, I'm not a fundamental analyst, so we don't go in depth into it. But my analyst tells me that it's going to be more of a pricing-led move. And these days the markets discount the fundamentals well in advance. So you might not have too much logic in saying that why metals will do well. I guess the logic will appear at some point of time, because chartically, I think all the negatives that we saw on the ground has got absorbed really well in the last 2.5 months.
How quickly do we get to 25,500, Gautam?
Well, 25,500 is 2%. I think one good move on a Reliance or a SDFC Bank or a ITC, I think can take us there. And given the fact that we digested all negative news flow so well in August, I wouldn't be surprised if we are at that number sometime in the first half of September itself.
Okay, thank you so much, Gautam Shah, for giving us all of those views, for breaking this down, again coming on board on short notice. Thank you. But let's quickly switch focus back to specific markets. We spoke to a host of market leaders. And what's the key in terms of the market situation? Let's hear Harsha Upadhyay. Listen in.
Clearly, from a short-term perspective, I think market has reached a level where valuations have become elevated, and they have remained elevated for quite some time. On top of that, what we have seen during the first quarter of this earnings season is also that the EBITDA growth as well as PAT growth for Nifty basket has been very, very tepid. If you look at a post-COVID scenario, this is the first time where we have seen in a quarter EBITDA growing at just about 5% on a year-on-year basis and PAT growth coming at just about 4%. While most of this was expected, but still it is very, very muted compared to previous several quarters. So to that extent, while the undertone is bullish, probably market is looking for a direction in terms of where the next set of large earnings are going to come from. And that's where probably market needs some bit of a cool off at this point in time.
I don't think the rate cut is going to be exciting enough for us per se. By the way, if you go back in history, normally the rate cuts are followed by, the first rate cut. You don't see much of euphoria because already up to that rate cut, the euphoria has already been built up. So global markets are, I think, more or less discounting that. Given the domestic flows that you asked about, the foreign flows into India, I don't think it's going to happen in a rush, given that the way the capital gains were given out. The increase happened in July. You must have noticed that after that, only the FII selling was happening. Prior to that, they were actually buyers every day.
I think there's no doubt that the fact that the economy is on the right trajectory is something which underpins it. Because, one thing which people ask me that are we in a bubble or not? And I say that, yeah, the market may be expensive, but a true bubble is when the market's going up and your earnings are going down. Which is what happens, by the way, at the end of
your
all
earnings
big bubbles.
Down.
Yes, like even the tech, NASDAQ and all that, the earnings growth began to really slow down. And I'm concerned in the US today, if you look at the top leading tech stocks, we're beginning to see that earnings growth slow down. In India's case, generally the earnings have done pretty well. And it's been a very broad-based economic rise of at least the stock market in terms of the various sectors have done well in India. So that way it seems grounded in the reality that the economy is moving in the right trajectory. But of course, it's been amplified by the fact that you've had this trend of financialization, which is that people in India hardly owned any equities, and now they've become used to pouring money into equities at every dip, every month. So that financialization that's happened is what has led to India now trading at a big premium to other emerging markets. So this combination of the economy being in the right trajectory, the fact that earnings growth has held up, and now it's been fueled increasingly by the steady flow of domestic money is what I think has really helped.
Right, so that are the views of some of the market experts on what you can expect going forward from the stock markets in 2025. But moving on, KC has been in focus. It's received an order recently. It also received an order on Monday, and it's been buzzing since then. Anushi is joining us with more details. Anushi?
Right. So now, Mahima, as you mentioned, that KC has been buzzing, not just today itself, even on Monday, and it's on account of two order wins which have taken place. And these are two considerable large orders that we are looking at, both of them in the size of 1,000 crore plus order wins that have taken place. So I'll come to the first order, which is in focus for today. Now, it won T&D orders, that is transmission and distribution orders, worth about 1,171 crore in Middle East. Now, this pertains to making a 400 kilovolt of a transmission line in UAE and Saudi Arabia, which is for 380 kilovolts over here. In other order win, also, if we look at, the company received 1,079 crore of an order earlier this week. Now, again, this was for the T&D business side, which spanned across India, Middle East, as well as America. And other than that, it has also secured some orders for its cable business in both the Indian and the overseas business that we are looking at. So, considering both of these orders, values that are now that we are seeing, the order intake for the year has come up to about 10,000 crore, which showcases about a 80% of a growth year on. The company has a target of achieving an order inflow target for about 25,000 crore, of which it has already achieved this 10,000 crore as we speak. So taking that into account, and the order book, which includes the L1 pipeline, that's the lowest bidder pipeline also, as of as of June 24, that stood at about 42,000 crore, and the order pipeline stands at about 1.5 lakh crore. Now, coming to the other aspects on what we can see from KEC onto the numbers bit, if we see the Q1 performance, a bit on the inline side over here, revenue saw about a 6% growth. Margins remain majorly in line in the 5 to 6% range that we are looking at, and net profit stood at about 88 crore as compared to 42 crore as we speak. In the segments also, transmission strong performance, 17% growth. Railways have not been the stronger side, 38% of a decline that we are looking at. But civil and oil and gas pipelines continue on the stronger side. Onto the outlook going forward, management expects a revenue growth of about 15% for FY25 and expects the margins to come up to about 7.5% in FY25 and 8.5 to 9% by FY26. So that's the whole view that we are looking for KEC International, Mahima.
Right, Anushi, and the kind of stock up move that it had seen in the past 5 days, it's up around 12% in the past 5 days, and today itself it's up around 7.4%. But let's shift focus to the FMCG space. While the FMCG space is buzzing today, one stock that is under pressure is Procter & Gamble, and this is on the back of its Q1 earnings that came out post market hours. The stock is down around 2.7% as we speak. In terms of the Q1 FY25 numbers, revenue was up around 10%. However, EBITDA was down 44%, and margins, have taken a significant hit from that 24.8% mark to the 12% mark, and net profits overall were also down by 44%. Now, what has led to this kind of margin contraction? Well, the ad spends to sales ratio was extremely high at 16.5%, and this has been the highest since the past 12 quarters so far. And in terms of employee expenses, that was also on a higher side, which was around 7.2%, and other expenses also enhanced and went up to 21.4%. Now, in terms of key highlights, well, despite the kind of hit the net profit has taken, the management has recommended a final dividend of 95 per share. They'd also given an interim dividend of 160 per share, which was declared in Q2 FY24. So their total dividend for FY24 overall stands at roughly 255 per share. So this is the overall view of Procter & Gamble and why it's under pressure in trade today. But let's also shift focus to the macros. Well, the stage is all set for Q1 GDP data, which will be released later today, and Pallavi joins us to tell us what to expect from the data.
India's GDP figures are expected to be published on Friday evening. Now, India's economic growth is expected to have eased to the lowest in more than an year, and it will be coming in at sub 7%. That's because of lower corporate profitability as well as lower government spending because of the general elections. GDP growth is estimated to come in at 6.8% in the April-June 2024 quarter. That's according to economists polled by Bloomberg. That's lower than 7.8% growth we saw in Q4 of the previous fiscal year. GVA growth is estimated to come in at 6.5%. Let's have a quick look at some industry-wise trends as well. Starting with agriculture, the space is expected to grow by 1%. That's according to estimates by ICRA. That's because of a little bit of an impact first from the heat waves and then from the monsoon deficit that we'd seen in June. Since then, the monsoon has clocked a recovery. Now, moving to industrial GVA, manufacturing growth is expected to see some easing. That's because of lower corporate profitability, because of an uptick in global commodity prices, along with lower growth in manufacturing IIP volumes as well. That's expected to reflect in these figures. Now, coming to consumption, the expenditure-wise trends. Now, on consumption, urban consumption trends have weakened a tad bit, even as rural is making a recovery. And in terms of capex, we do expect to see a lower figure because of lower government spending, both at the state as well as the central level. Now, for the full year as well, there are risks to the downside currently. RBI's forecast for the full year is at 7.2%, but we're going to have to wait and watch if we manage to touch the 7% figure for the fourth straight year for FY25. Do stay tuned to NDTV Profit on Friday evening for our live coverage of GDP.
Thank you so much, Pallavi, for breaking that down for us and telling us what to expect from the GDP going forward. Well, but with that, it's all that we have on the show for now. Do stay tuned to NDTV Profit for more news and updates.
फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो naturally younger population जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
This week on India Ascends.
Poll-bound Sri Lanka and volatile Bangladesh witnessing India versus China power play. Will the trouble in Balochistan topple the
Hello and welcome. You're watching Market IQ and I'm Pallavi Nahata. Now, we're going to delve into the GDP figures that are going to be published tomorrow evening at 5:30. Broadly, GDP is expected to have eased to the lowest in almost a year, or maybe more than a year, with GDP growth likely to print at sub 7%. This is for the April-June quarter 2024. Now, if we have a quick look at estimates, according to a poll by Bloomberg, GDP is estimated to grow approximately by 6.8%, while GVA is estimated to grow by 6.5%. GDP growth is a tad lower than the 7.8% growth that we had seen in Q4 FY20 in the previous fiscal year. Coming to the industry-wise trends as well, in case of agriculture, we have seen some impact first of the heat waves and then of the monsoon deficit that we had seen in that quarter. Ever since, the monsoons have clocked a strong recovery, but that impact is expected to show up a tad bit on the agricultural front. On the industrial GVA as well, we have seen corporate profitability of companies having eased from the preceding quarter. One of the reasons for that has been a rise in global commodity prices, which means that companies have been paying more for raw material. In terms of expenditure-wise trends as well, we're likely to see a slower figure in terms of capex, with the government both at the central and the state level having gone slow on capex amidst the general elections that took place around that time. Private consumption also is likely to continue to see some risks while there has been some signs of recovery. On the rural front, this time around there's some concern that's possibly emanating from urban consumption trends. But we're going to find out more about these trends tomorrow, and for her expectations from the GDP figures that are due to be published, I'm in conversation with Upasana Chachra, Chief India Economist at Morgan Stanley, who joins us now. Upasana, thank you so much for taking time out for us.
Thank you, Pallavi. Always a pleasure.
Well, it's a pleasure for us to have you, but to dive straight into it, I do want to understand what's your expectation from the figures tomorrow, and is that also sort of likely to indicate the trends we're going to be seeing for the rest of the fiscal year?
So our expectation for the quarter ending June in terms of GDP and GVA numbers is pretty similar to what you laid out with the consensus numbers. We are in the same camp in terms of expecting a number which is sub 7% on GDP at 6.8 and on GVA a little lower at 6.5. So I think there are some impacts of the seasonality trends that we've seen in the past as well, i.e. the first half of the fiscal year tends to be a little weaker seasonally. And on top of that, we have seen, a little bit of an exaggerated trend in the June quarter due to elections, and that led to a slowdown in government spending, which has, repercussions in terms of government capex and also in terms of government consumption numbers and related numbers that we can see. So we do expect a moderation in terms of the GDP and GVA numbers, but I think if we were to look at GVA versus March quarter, then the trend is more steady or a little better versus what we saw. The March quarter GVA was at 6.3. So I think in terms of the year ahead as well, as you ask, I think our numbers are at 6.8 for fiscal 25, a little lower than RBI, and I don't think it should be characterized as a big slowdown or a moderation, because GVA is something which probably remains more steady, but GDP will see a moderation versus fiscal 24, largely due to the normalization in the gap between GDP and GVA.
Okay, all right, Upasana. So, I do want to follow up on that. So, broadly, given that GVA is expected to hold steady in Q1, what does that say about broader economic activity? Can we then safely say that economic momentum continues to remain fairly resilient in Q1? And the reason I'm asking that specifically is because there have been some concerns. We did see lower profitability from companies. IIP growth has been slower. So, how are you sort of piecing together that picture?
Sure. So I think, when you look at the sum of parts in terms of the GVA or the supply side of the economy into agri, industry and services, you're likely to see a moderation in the industrial segment, more specifically in the manufacturing segment in terms of growth impact. It is led by, as you mentioned, corporate profitability coming in weaker, getting impacted both by, the government spending sort of weaker, so some of the revenue line items, and also by the increase in input price pressure. So even if we were to just look at the trend in WPI, that has moved up in the June quarter versus where we were in the March quarter. And that is going to happen as well, because now the base is going to change and you're going to see more like the YOY numbers on WPI picking up as well. And that does impact your deflator and, may have some impact in terms of the profitability trends. So industrial activity, I think, will see some moderation in the YOY numbers. On the services side, though, the momentum remains pretty solid. So high frequency trends from PMI services or other high frequency data points such as air transport, air cargo, or the credit deposit numbers, etc., which go into the services segment data points. All of that have held up in the June quarter.
Right.
Gaining momentum, industrial activity moderates a bit.
Okay, all right, Upasana. So the momentum in services continues to remain intact, while manufacturing GVA might be a tad slower. But, shifting focus to expenditure side trends, consumption's one space we've been tracking closely over the last few quarters. Are you seeing steadier signs of recovery there as well? Are you seeing any weakening in urban consumption indicators, even as there are clear signs of a slow but steady recovery in rural? What's the consumption picture looking like?
So on the consumption side, we are seeing signs of pickup in the rural demand. So FMCG, say volume growth has picked up or it has outpaced urban for the first in the March quarter and back to back again in the June quarter as well. Again, we are seeing pickup in the two-wheeler sales and improvement in the tractor sales as well. More or less, most of the rural high frequency data points that you can track will show an improvement. So things like, work demanded under NREGA, that has also moderated, so i.e. reflective of probably better trends in the rural economy at a broader level. On the urban consumption side, I think PV sales or auto passenger vehicle sales is one area which has seen a slowdown, and that has created a little bit of concern on urban demand. But I think if you look at the underlying drivers of urban demand, more specifically like labor market trends, those have actually at the margin improved. So like Naukri job index growth, that has actually been improving. So it's toughed out, and the YOY numbers are improving there. We are also seeing like on the CMI unemployment rate that did moderate a bit in the June quarter. So I think probably, I wouldn't really overplay the concerns on urban demand. I think the gap between rural and urban will likely narrow. But net, I would expect consumption to do better in fiscal 25 than what we saw in fiscal 24 if you have to look at the GDP numbers on consumption.
Okay, all right. So, again, continuing with expenditure side trends, one area of concern has been, the fact that this time, because of the general elections, we have seen a slowdown in government capex, and that's the segment that was largely driving growth last fiscal. So what's the impact, and also what's the outlook going forward? Is it sort of a temporary blip we saw because of the general elections, and can we expect that space to continue to drive growth for the rest of the fiscal?
So on capex and more specifically public capex, so see the June quarter will probably be an aberration, and we will see slowdown in government spending related line items, and that is more like an aberration for the June quarter. After that, the spending patterns have normalized, and that will start reflecting in the numbers itself. But I think if you want to think about it like fiscal 25 versus fiscal 24, then we do expect a moderation in public capex. That is evident from the numbers in the budget as well. So they still remain pretty healthy. Like overall capex numbers are budgeted to be around 17% YOY. But it will be lower than what we saw in the previous years or previous 2-3 years in terms of the CAGR growth rate. So the key would be for private corporate investments to pick up. June quarter high frequency data, especially if you look at CMI related data on private sector investments, new investments or projects under implementation, that has been weak in the June quarter as well. You can attribute it to the election event because that does just play a big role in terms of dampening activity in that sense. But I think probably from here on, you will see more increase in or greater traction on private corporate capex side as well, because some amount of green shoots have already been visible. It's just that June quarter in terms of some of these new investment numbers have been weak. So I think overall the balance on public versus private capex can shift, even though public capex growth remains relatively robust but lower than last year.
Okay, all right. So one last question before we can let you go, Pasna. You did partly answer that. I do want to ask you, however, once more about high frequency activity post Q1, how that's looking in the ongoing quarter. And also, given the whole host of factors at play, for the full year, would it be fair to say that at this point, given what the RBI's forecast is, we are looking at downside risks to that, and that's pretty much in line with what your forecast is as well for the full year?
So for high frequency data, we are, in terms of when we look at July numbers, it's sort of maintaining the trend momentum that we saw in the June quarter. And June quarter per se from a high frequency indicators basis was not like very, very strong because it was mixed with some of these industrial activity numbers moderating, services holding up. So July early reads or August early reads, the momentum hasn't changed meaningfully, and I would attribute it to the point that I made initially as well, that usually first half of the fiscal year tends to be seasonally weaker. July to September is also marked with the monsoon period, so construction activity, capex activity tends to take a back seat, and I think it will be more fair to assess high frequency numbers in the second half, and especially as the festive season starts to kick in. So I would expect that the momentum will pick up more meaningfully as we go into the third quarter of the fiscal year or more to the second half of the fiscal year. In terms of numbers, at the moment, we are comfortable with our 6.8 number. Yes, lower than RBI's at 7.2. As I mentioned, high frequency data as yet is not pointing to a momentum which is, at least indicating that we should be reassessing our numbers as of now. We'll obviously be waiting for the final numbers tomorrow to see, what's the actual data for June quarter looking like.
All right, that's fair. Thanks a lot for taking time out for us, Upasna. And do stay tuned to NDTV Profit for our coverage of the GDP figures when they are published tomorrow evening. But moving on, let's take a very quick look at how the markets are performing currently. We did see the benchmark indices, both the Nifty 50 as well as the Sensex, hit record highs. In case of the Nifty 50, that's the second day in a row. Currently, the Nifty 50 is going strong. It's up by almost about 0.4% in the green, up by about 100 points and trending around the 25,150 levels. On the Sensex as well, it's up by almost about 0.5% and by about 350 points or around that much. Nifty Bank is up in the green by about 0.25%. Nifty IT and FMCG are some of the other contributories to the record high figures that we've seen today. Broader markets, however, once again continue to underperform a tad bit. The Nifty Mid Cap 150 as well as the Nifty Small Cap 250, both in the red, while the Nifty Small Cap 250 is down by about over 0.5%. The Nifty Mid Cap 150 down by almost about 0.75% or a tad lower than that actually. But let's also move on to some stock specific action. KEC International is one of the stocks that that's on our radar today. It's up almost about 8%, and this is as the company announced a recent order win. My colleague Anushi joins us with more details on that stock. Anushi.
Right. So as you mentioned that the stock is buzzing, KEC International is buzzing on the back of an order win that we are looking at, and it's just not this one order win that has taken place. A couple of order wins, like if you look at the past week itself, 2 order wins of about 1,000 crore have taken place in this week itself. Now coming to the recent order, that is about 1,171 crore, and this is the Middle East region for the transmission and distribution business of the company. Again, this stems for both UAE as well as Saudi Arabia, whereas the other order win was up to about 1,079 crore, which was again for a bunch of segments, mainly for the transmission distribution segments in India, Middle East and America, along with some cable business orders also that they've won across India and overseas business. Now with this, the order positioning of the company adds up to about 10,000 crore, showcasing about 80% of a growth from year onwards. FY25 order inflow target for the company stands at 25,000 crore, of which they've already achieved this 10,000 crore that we are looking at. If you look at the order book plus the L1 pipeline, that's the lowest bidder pipeline also for by the quarter end, that stood at about 42,000 crore. And the order tendering pipeline going forward exceeds rupees 1.5 lakh crore as we speak. Now coming to how the company had performed in the last quarter, it was an inline performance base. Revenue saw about a 6% growth, while margins stood in the 6% range, which was the trend in the last couple of quarters as well. But onto the outlook going forward, the company expects the managed revenue growth of about 15% for FY25, while it expects its margins to improve to 7.5% by this year end and to 8.5 to 9% by FY26. And also, they will be conducting a capex which will range to up to 350 crore for FY25. So this is why KEC is buzzing on the back of the order wins, and what is its outlook going forward.
Right. In fact, we spoke to MD and CEO Vimal Kejriwal earlier today and asked him about the order inflow as well. Here's what he had to say.
As far as the order pipeline is concerned, so this year we already got orders of close to 10,000 crores, 9,900 and odd, and we are L1 in another 7,500. Our stated announcement is that we should be doing around 25,000 crores of order intake for the year. And as of today, our tender pipeline, which is tenders which we have quoted right now, which are not yet opened, or tenders which we are going to quote in next, let's say, 2 or 3 months, is roughly around 150,000 crores. A very large tender pipeline on top of the current order intake and L1s.
And block deal candidate Interglobe Aviation is buzzing today on the news that the Gangwal family will pare its stake in the company. Mahima has more details on that one. Mahima.
Right, so Interglobe Aviation has been buzzing in trade today on the back of a block deal, and roughly 5.8% of its equity has exchanged hands, and roughly 22.5 million shares did exchange hands. Now, this was done at a price of 4714.9. Now, in terms of giving a brief as to why the promoters are selling their stake and what is the timeline been like, well, in terms of the total holdings, it will be reduced by roughly 20% now, and the shares are being locked in for the next 150 days. And in terms of Rakesh Gangwal, he holds around 5.8% stake, and overall Chinkarpur Family Trust holds around 13.5% as of June 24. Now, as of Feb 2022, Gangwal had stepped down from the board, after which he started selling stake in Interglobe Aviation. As of December 22, the family held roughly 34% stake. Rakesh Gangwal held around 13.24%, and Shobha Gangwal held around 7%. The 7% stake was completely sold off in September 23, and Rakesh Gangwal today, along with the trust, has also sold around 5.8%. Now, just to understand as to how the promoter's stake has been reducing for Interglobe Aviation. Now, since September 21, the promoter's stake was roughly 75%, which has gone down to 55% as of June 24. In terms of FIIs, the stake has increased from 18% to 24%. For DIIs, the stake has significantly increased from the 4% mark to a 15% mark, and overall public shareholding has also doubled from roughly 2% in September 21 to 4.85% in June 24. So while we are seeing that brokerages are being positive and a lot of developments have taken place in Interglobe Aviation in terms of increasing their international fleet, as well as the recent announcement of them entering into the business class segment, promoters are exiting the stock right now.
And right, staying with the aviation space, we're getting exclusive news from our sources at SpiceJet that the financial troubles for the beleaguered airline are deepening. We believe SpiceJet passengers were denied boarding at Dubai airport. My colleague Aditya joins us with more details on that one. Aditya, what are sources telling you?
Yes, absolutely. We are gathering from our sources that SpiceJet passengers were denied boarding today at the Dubai airport, and this was basically because of the delay in the payment of dues of the Dubai airport by the budget carrier SpiceJet. Now, our sources are also telling us that the financial trouble has deepened for the airline, because it's not just with the dues of the airport that are being delayed, but the salaries of employees have also gotten delayed by a few days or a month or so, is what our sources are telling us. And our sources told us that the salaries of the month of July were paid to the employees in the month of August. So this basically is some section of the employees who have gotten their salaries delayed. But yeah, all these things are definitely indicating towards financial troubles brewing in the budget carrier SpiceJet.
All right, thanks a lot for that, Aditya. We will bring more on that over time. But moving on, for the first time, the Hurun India rich list has surpassed 1,500 entrants, reflecting a 150% rise from 7 years ago. The cumulative wealth of the Hurun India rich list members now exceeds 159 lakh crore rupees, surpassing the combined GDP of Saudi Arabia and Switzerland. India now has 334 billionaires in dollar terms, marking a 6-time increase since the list's inception 13 years ago. The country minted a new billionaire every 5 days over the last year. King Khan has also made his debut on the list with a wealth of 7,300 crore rupees thanks to his stakes in Kolkata Knight Riders and Red Chillies Entertainment. He led a wave of new entrants from the entertainment industry that also includes Juhi Chawla, Hrithik Roshan, Karan Johar and Amitabh Bachchan. In terms of positions on the rich list, Gautam Adani and family have secured the top position, followed by the Ambanis. In fact, we spoke to MD and Chief Researcher of Hurun India, Anas Rahman Junaid, about this. Take a look.
I think one big change is Mr. Gautam Adani is back number one after what happened a couple of years back in terms of Hindenburg allegations and so on. I think I've written my press release also, he's risen back like a phoenix. By almost all of his company has companies have done very well, and he's taken the number one spot, and that's quite exciting in terms of how Indian entrepreneurs are more and more self-made entrepreneurs are creating super valuable enterprises from a top 10 standpoint. And you also see you also see the number two is Ms. Mukesh Ambani, and number three is Shiv Nadar of HCL, who has also had a great year when you compare to his peers and maybe in the software sector. But then the top 10 is interesting, but I think what is more exciting for me is when you go deeper into the list, the overall statistics from a list perspective, that is the most exciting part. Even if you look at top 10, to enter top 10, if it was 10 years back, to enter top 10, you had to have a wealth of about 44,000 crores. Now, fast forward 10 years later, it is about 1,60,000 crores. So that number has gone up by 4 times. So 5 years back, it was 72,000 crores. So from a top 10 standpoint, it is getting even more difficult to enter the top 10 wealth creators in the country.
And it's day 2 of the Global FinTech Fest, where some top industry voices are addressing developments in the fintech world. Let's listen into SEBI chairperson Madhavi Puri Butch talk about the role of fintech in the ease of doing business. Listen in.
Every aspect of business and compliance continues, but it has to be made easy. It has to be made strong. Now, what really is the role of regulation? Why is there compliance in the first place? Why can business not do without any regulations? Why can it not do without any compliances? The reason is simple, that in a social environment, in an economy where rights of the consumer and of the investor are to be protected, there is an imbalance of power between large corporations and institutions and the small investor and consumer.
And the monsoon fury continues in Gujarat as incessant rains lashed the state in the last 4 days. Currently, 29 people are dead and more than 18,000 people have been evacuated to safe zones by the NDRF teams. IMD has also issued an alert for heavy downpour on the August 30th as well. That's all we have on the show for now, but do stay tuned to NDTV Profit for more news and updates. Thank you for watching.
This week on India Ascends.
Poll-bound Sri Lanka and volatile Bangladesh witnessing India versus China power play. Will the trouble in Balochistan topple the cozy China-Pakistan relationship? Is the pro-China Moidzu government in Maldives in trouble? The French flip-flop over the next Prime Minister continues.
All this and more only on India Ascends with me, Gauri Dwivedi, at these timings on the NDTV network.
अगर फूड प्राइसेस ज्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया, हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविजन, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
If you're an investor, then I would say please do not invest in residential.
Can investment into real estate still be justified?
The cost that you arrive at to buy the property is the only beginning. I would say Bangalore is a great place to go out and sort of buy. If you're an investor, people who are buying homes for the first time or upgrading their lifestyle, they want every bell and whistle included into the property.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar and our focus today is on sectoral funds. Sectoral funds, in a sense, have fallen out of favor. Let's take, for example, defense funds. Defense funds, and one or two of them have stopped taking more money in them, but have also seen a bit of underperformance in the last 1 month. Now, if you look at 5-year returns, of course, it's been great. But if I look at 1 month performance, you will see that there hasn't necessarily been that kind of up move. Now, the question we're asking today is, should you re-look at your investments in sectoral funds? Who are sectoral funds for, and which are the sectors which make sense right now? To speak on this, I'm joined by Kirtan Shah, MD of Credence Family Office, and Mrin Agarwal, financial educator and founder of FinSafe India. Welcome to both of you, and great as always to speak with you. Mrin, let me begin with you and just really get your inputs on what we're talking about sectoral funds.
So, good afternoon, Tamanna, and it's lovely to be here today. I have never really recommended sector funds. And, of course, there's been this huge inflow this year into sector funds, mainly in manufacturing, infrastructure, consumptions, business cycles. But again, if one were to see the performance of various sector funds on an annual basis, and this is just data that I got of Value Research. On an annual performance, if you look at the category returns, you see that there's a lot of variation in returns in sectors, right? So, for example, there are certain sectors which do really well, and then like if you look at 2021, you had certain sectors like, for example, energy, which did really well, but then it had a really bad performance in the next year. Or if you look at technology, right, 21, you see a 63% return followed by a minus 23% and then 30% last year. So, the thing with sector funds is that they are extremely volatile. And as such, I feel that whatever other high conviction ideas within these particular sectors would anyway be there in the broad-based funds.
Okay. The question really is, and I actually have this data right here, the thematic 1 month returns has right now not been as great. And maybe the reason is that some sectors have not been doing as well as others, whatever the reasons might be. Now, my question to you, Mrin, in that sense is, should you really relook at your portfolio in terms of sectoral funds, move out of them, or just stay put for some time?
I think it's always a good idea to exit and reallocate to broader based funds.
That's a very clear-cut answer there. Kirtan, would you agree with that?
Tamanna, I think I am very much in sync with what she has to say, because look, in my opinion, sector funds are meant for very sophisticated kind of investors, and it is never, or it ideally shouldn't be a part of your core portfolio. Your core portfolio is still more market cap based investing, which is more diversified. You might have 10-20% of your investments which probably may align to sector investing, provided you understand that this is a very sophisticated way to invest. So I don't really think this is for the larger set of audience, because in a sector fund, if you cannot get your timing correct, both the times while entering and while exiting, you probably might end up being languished with underperformance for a long time. You look at infrastructure at the peak in 2008, people took decades to actually get back the performance in infrastructure when they invested at the peak of it. So I think cyclicality is a very big challenge. Identifying which sector will make a lot of sense at what point in time, and specifically being able to time the exit, are big challenges which probably retail investors are not meant to do.
We'll try and get this chart up of 1 month returns, and you'll see that how, especially in areas like infrastructure funds, you've seen a fairly poor sense of returns, and in some cases negative returns as well. Now, let's come to this bit that, Kirtan, you are having a lot of new fund offers focusing on sector and thematic funds, because there has been a pretty good run up in the last year or so. Would you say that they're all in a void, or would you judiciously pick some of these?
Ideally, very honestly, one single data point, if I have to look at and generalize this, I think the day you see a sector fund NFO coming out, it's a